Hello viewers, today we shall be taking up audit procedure, and in this chapter today we shall be discussing vouching, verification of assets and liabilities, and this is covered under the unit 3rd of the auditing portion. Now let us try to know what will be the learning objectives of the session today. After studying this chapter, you will be able to gain knowledge on vouching of cash and trade transactions, understand the types of accounts and various procedures of vouch of each account specifically, prepare the bank reconciliation statement. Now let us examine the term called as vouching. The act of examining vouchers is referred to as the vouching. It is the practice followed in an audit with the objective of establishing the authenticity of transactions recorded in the primary books of accounts. Whatever entries are done in the accounts book of the entity, they are always supported by some or the other external evidence. These evidence would be in the form of bills or some internal supportings which could be the receipts which are issued to the clients. Now these are also added to make the entry look more reliable, so that during the audit the authenticity of the transaction can be arrived at. On these considerations, the essential point now to be borne in mind while examining a voucher are that the date of the voucher falls within the accounting period, that the voucher is made out in the client's name, that the voucher is duly authorized. The date of the voucher should be in the accounting period, which is usually the financial year of the entity. It should neither be before nor after the accounting period, because then it would not represent the state of affairs of the company or the concern which is under the audit. Secondly, the voucher should be made out in the client's name. The expenses should have been incurred by the clients, or the receipts should have been made out in the client's name. Thirdly, the voucher should be duly authorized. If any expenditure is done without authorization, then the voucher is not reliable. The next one is that the voucher comprised all the relevant documents which could be expected to have been received or brought into existence on the transactions having been entered into. It should have been supported by the evidence. If the evidence is external, it is all the more reliable and better. That the account in which the amount of the voucher is adjusted is the one that would clearly disclose the character of the receipts or payments posted thereto on its inclusion in the final accounts. It has to be borne in mind that either the money is going to come into the concern or it is going to go, but the account in which it is posted reflects the true state of affairs of the company. There could be an expenditure by the company which is of capital nature, a heavy repair being carried out. Such an expenditure needs to be capitalized and added to the cost of the asset, whereas routine repairs or expenses of annual nature which are recurring will be debited into the P&L account. So the posting of the entry is also one of the criteria to be kept into mind while checking the voucher. We shall be discussing in this study the vouching and audit aspects of the following. The first being the audit of the cash transactions, the audit of the payments made by the entity, the cash receipts received by the entity, verification of bank balance and the cash in hand, audit of the trading transactions, audit of the purchases made by the concern, the sales made by the concern, and the cut-off arrangement. The term cut-off arrangement means the latest entry or the latest transaction which has to be entered into the company. Beyond that date, all the entries will be taken up in the next financial year. So it is the last date or the end date up till which all the entries will be covered in that financial year. Now we shall be taking up the audit of cash transaction, which is the first topic of discussion of the vouching. In any business, probably cash transaction account for the largest bulk of transactions. Cash being highly liquid asset, it is exposed to frauds of various types. Cash can be easily carried away. There are innumerable instances where the fraud can be done or the cash can be embezzled because of its easily availability and the bulk transaction being in cash. Therefore, it is essential for the auditor to satisfy himself that the cash transactions entered into by the client have been correctly recorded in the books of account and all the procedures laid down for the entering of such transactions have been complied with. So, the auditor has to be satisfied that there is proper internal control and management with regard to dealing of cash in the entity, whether it's a company or a firm or a sole proprietorship. Also, he sees that no loose cash is lying with the entity and unentered into the books of the account. Now, to verify the cash transactions, more than anything else, it is necessary that the system of accounting and internal control operating in the organization should be reviewed. Also, recording of the cash transactions should be checked. It should be seen that each documentary evidence which is valid and that the statement is authorized by a competent official. Further, on its inclusion in the final accounts, its nature would be truly disclosed. Since transactions are either occurring through the cash or through the bank, so the cash aspect, which is prone to the frauds, embezzlement and misappropriation, proper safeguards have to be taken by the entity so that it is not at loss due to improper management of the cash that is lying with it. Now, the areas which require consideration while the vouching of cash transaction. The first and foremost is the internal control system. Second is the correctness of bookkeeping records. The third one being observance of accounting principle. The fourth is the evidence of transactions. Fifth being the validity of the transactions, and sixth being the disclosure in the final accounts. Now, we will be discussing about the internal control system while handling the cash. The internal control system is a combination of several procedures which are adopted by an entity. Now, these are designed to give protection against the losses through fraud, waste, mistakes, etc., to ensure that the transactions entered into shall be correctly recorded and to enable the concerned to take policy decision as regards planning and operation of the business at the appropriate time. Now, we shall take up the steps which are involved in the verification of the system of internal control. First and foremost thing which needs to be done is to study the internal control system of the entity. In studying the internal control system, we have to study the accounting routines that are being carried out to ensure that these do not leave any receipt of cash, material or any other asset remaining unaccounted for, permit any payment of money being made without relevant goods or services having been received or tendered, or any property being given away without its price having been received or being accounted for. So, this internal control system regarding the cash is that money either coming or money either going, it should be validly supported by the entry of either receiving the goods, selling the goods, or the services being rendered or services being taken. So, the money should not exchange hands until unless there is a proper authorization and the reason and necessity to send the cash. The second one is examining the financial power vested within different persons and condition under which they exercise them. There should be a clear demarcation of the authority that is given to the various professionals and accounting people who are entering the cash receipts. If such an authorization is not done, then the person may exceed its authority and there could be a huge embezzlement of cash in that regard. So, internal control measure also involve in demarcating the authority of the person, how much cash he can be allowed to handle. Because there is also a concept of petty cash and the main cash book which is there. That aspect we shall be doing in the maintaining the entries of the cash within the books of the accounts. The next one is confirm whether the supervision over various managerial and accounting functions exercised by different members of the staff to whom these duties have been assigned is adequate. After these people who are managing the accounts and the cash have been given their authority regarding dealing with cash, there should be a supervision over how they are doing their duties. So, a surprise check or internal check system should be there, where there is cross checking of their work with certain time period which is not already fixed. So, surprise checks should be planned within the entity, or they can also be done by the auditor who has come to audit the entity. The next one is the ascertaining whether any mechanical aids are being employed to ensure proper accounting of receipts and prevention of pilferage of cash, stamps, etc. Mechanical aids would mean whether an entry of all the cash notes received is being done by a cash teller, or they would also involve in keeping a track of how many stamps are there, because both the things are highly liquid. The stamps also run into lot of value, and also the cash notes which are there, the currency notes which are there, run into lot of value and are easily carried. Then the next one is observing the working of the accounting system and routine, and determine by application of procedural tests whether the checks and counter checks envisaged by the system of internal control are being properly applied. After we have taken care of the authority being given to the officials and the supervision and mechanical aids, the next aspect is the accounting of the cash. The system of accounting, the routine of accounting, the way it is being managed should also be supervised and checked. Also, it should be seen whether the work of one official is getting counter checked by another official. The whole of the transaction, right from receiving the cash up to the posting of the entry into the ledger from the primary book of accounts, should not be single-handedly done by one person. Instead, it should be done in phases and should be counter checked by another person in this regard, so that he does not have the exclusive right to enter the transaction fully on its own, because this gives him supreme power to handle the transaction, and there is more chance of making an error and more chances of also embezzlement of the cash in this regard. Then is confirming whether there is a system according to which the physical existence of different forms of assets is being periodically reconciled with their balances in the books of accounts, or stores records and discrepancies noticed are reported and adjusted. It should also be seen that there are some that there is a system according to which the physical existence of different forms of assets is being periodically reconciled through the books. It is not only the entry aspect which is there, but physically they are also examined, counted and tallied with the entries which have been made. This is especially true with the stock which is maintained by the company. After regular intervals, all the stocks and stores which run into high value should be examined, physically verified and checked, and also the entries made in the books should be cross-examined. All the currency notes and the coins that have been lying with the entity, at the end of the day, all of them should be checked, physically examined and entered into the books of accounts. These entries should then be checked by the supervisor, also by himself. The balances of the customers, creditors, bankers and persons with whom securities are deposited are reconciled periodically. It should also be seen that all the other persons who are connected with the entity, like the customers, the creditors, bankers and persons with whom the securities are deposited, it should also be reconciled, because they are in possession of all the securities of the entity and they are not readily available with the entity for a thorough examination by the auditor. Hence, there should be a reconciliation being done by the auditor at the time of audit. Those persons who are in custody of the valuable assets have furnished bonds of adequate value which would protect the company in the event of any misappropriation or misapplication thereof by such persons. People who are connected to the entity and they have the custody of the valuable assets of the company, they should have submitted a bond of adequate amount, so that if there is any kind of embezzlement on their part, the entity is already protected by such an event. This is especially true in the case of banks. All the cashiers and all the tellers, whenever they join the service, they have to furnish a bond of adequate quantity, so that any embezzlement occurring for which they are responsible, the bank is already safeguarded with such a loss. Then is ascertaining that the system of internal control is reviewed periodically, and where necessary a change in procedures made to plug in any loopholes which might have been observed on such a review. Usually whenever an entity starts its business, it also sets up its internal control system. Such an internal control system over the years of performance by the business may turn out to be obsolete and may not serve the purpose in the future also and foregoing time period also. So it needs to be reviewed every time so that there is any change which is occurring in the nature of the business due to expansion, due to diversion or due to any other reason. The internal control system can be suitably amended to incorporate all these changes, plus any kind of loopholes which are there in the internal control can be mended at the right time. Correctness of bookkeeping records. The audit of cash transactions entails detailed checking of the record of transactions for verifying that entries have been made in the books of account according to the system of accounting which is being regularly followed, and the books of accounts balance as under, that is vouching, posting, casting, cross-casting and tracing and reconciliation, scrutiny, confirmation, etc. So, the correctness of bookkeeping records will depend whether the vouching has been done properly, the posting of the entries into the accounts is proper, the casting and cross-casting and tracing also have been done in a proper manner, there is proper authorization for all the expenses. After that, there is a reconciliation of the trial balance that has been extracted and the accounts balances which are being shown into the financial statements. Now, when the accounts are checked in the foregoing manner, they may disclose one or more mistakes or manipulations in the accounts of different types as below. The first one being errors of omission and commission which are accidental. There could be an instance where the mistakes are committed, but there is no intention behind it, that is, it is not having any malified or a guilty intention. They occur because of ignorance or they occur because of accidental mistakes. Posting errors could be there, totaling errors could be there, and there could also be a failure to enter some of the invoices. The second one is the case of deliberate omission or commission. Now, such kind of mistakes are done deliberately with an intention to cover up the defalcation of the cash, to overstate the profit or the assets, to overstate the liabilities and understate the assets. Now, this have different repercussions or different effects on the account. If there has been an embezzlement, if the accountant has stolen money or if he has misappropriated money, then he may be prompted to defalcate the cash or cover up the mistake by suppressing a few transactions and overstating the rest of them. The second one, which is overstating the profit or assets, this can be done if there is the sales which are not pertaining to the accounting year and they are recognized in this year and there is no cut-off procedure which is followed by the entity. In such a case, the sales which do not pertain to the year, the profit with regard to that shall also be included, which will inflate the P&L account and also affect the financial statement. The next one, that is overstating the liabilities and understating the assets. This can be done to lessen or minimize the profit so that there is less of income tax and other taxes that are due from the company. Also, that could be done to increase the liabilities and show a sagging image of the organization. The third kind of an error is the error of principle. When the accounting principles have not been applied by the accounting professional in a proper manner, then such kind of errors occur. There could be a wrong treatment of revenue expenditure as capital or vice versa. And the last one is the compensation error. The compensation errors occur because of errors which are of mitigating types, in which the understatement of one account gets covered up by the overstatement of another account. For example, a mistake of ₹100 in the revenue expenditure account gets covered up by the repairs expenditure in the same account. So, the net effect will not get reflected in the balance sheet, but separately each of the account will have to be checked. Then is observance of the accounting principles. It is of utmost importance that the transaction should be recorded in the books of accounts having regard to the principles of accounting. These principles include the distinction being drawn between capital expenses and revenue expenses, the distinction being drawn between capital receipts and revenue receipts. The expenses or cost should be matched to the income or benefit. The expenses and income should be treated on an accrual basis of accounting, that the fixed assets should be depreciated on a consistent basis, that the book debts should be valued only at realizable amounts, that fictitious assets are written off at the earliest, and outstanding assets and liabilities have been properly adjusted. Now let us take up the topic of evidence of transaction, which is a very important aspect to vouching. Every entry has to be supported by vouchers, and vouchers are an evidence that the expenditure was actually incurred by the entity. So these kinds of evidence can be broken up into two, that is internal evidence and external evidence. They provide a basis that the expenditure was actually incurred by the entity during the accounting period in the name of the client and with the due authority. The process of verification of entries in the books of account with the documentary evidence, as we know, is called as vouching. Like we said, these two kinds of evidences are internal and external. Documents which are part of the records of the concerned and have been prepared in the normal process of accounting constitutes the internal evidence. Example, the counterfoils of receipts, carbon copies of cash memos or invoices, wages books, etc. The documents issued by the person with whom the client has some business transaction is called as the external evidence. Now these would include the pay's receipt, the invoice for the purchases, a court's decree, a lease agreement, a bank statement, etc. External evidence is always a better evidence because there is less chance of manipulation. They are always wanted by the auditors as they support the transaction much better. Also, the auditor can also ask for few more external evidence at the time of audit. This would include the confirmation of balances of debtors and creditors and the bank balances. Now the validity of transaction. It is also a function of audit to establish that the payments have been made validly to persons who are shown to be recipients. For example, it must be verified that the salaries to partners were paid according to the provision contained in the partnership deed, or that the director's remuneration was according to the articles of association or according to the resolution passed at the meeting of the company. So this shall be done only after the auditor has verified himself with the documentary evidence in this regard. Such a checking would involve the legal provisions having bearing on the accounts, the rules or regulations governing the internal working of the organization, example the articles of association, the partnership deed, the trust deed, etc. Minutes of the proceedings of a meeting of members, that of directors or of the managing committee, a copy of an agreement, example managing directors agreement, lease deed, vendors agreement, agency agreement, contract with an employee, etc. Now the final disclosure in the final accounts. The object of audit ultimately is the statement of account prepared from the books of accounts which have been checked should present a true and fair picture of the financial position of the entity. This particular object should be kept into mind while checking the grouping of accounts. The auditor should see that not only the items of like nature to be grouped together, but also description of each account truly reflects the nature of the amounts accumulated therein. So unless this has been verified, the classification of income and expenditure and assets and liabilities would be truly misleading. The auditor should take proper safeguards while doing the audit of the entity. Now there is this example regarding the director's fees and salaries to staff. If they have been added together, it would become misleading. Though they both refer to the remuneration, yet director salaries should be authorized by the articles or a resolution separately passed at the directors and the company's meeting, whereas the salary to the staff do not need any kind of authorization in the articles, but they are determined by the terms and conditions with the employees themselves. So clubbing of them would make the accounts misleading. With this, we are concluding our today's session. In this session, we discussed the term called as vouching, the meaning of vouching and what it refers to, the responsibility of auditor with regard to the vouching of the cash transaction, the liability and the responsibility of various professionals in the entity with regard to authorization, authentication of the cash transaction, and also keeping and maintaining the cash with the company. I hope you thoroughly enjoyed the session. Thank you so much.